be good to go. So I wanted to do this. I proposed talking about this because last year, almost exactly at this time, Arlen Sorensen up on stage said, based on a survey, 70% of MSPs want out. And that hit Twitter, and there was no context as things go. It's just a headline now. And what does that really mean? So at Forrester, we do a lot of research about you, your business model, and then the channel as a whole, and I'll take you through that today, and then try to answer this question of what that meant. And what we know it didn't mean, which 100% of partners I think would want out if the check is big enough. So if you extract that part of it, that if somebody's going to write you $1 billion check, all of our businesses are for sale, I'm sure. But it wasn't exactly that. And over the last 10 years, we've been looking at a lot of trends, I'll say underneath the covers. And the one thing we look at is indirect sales or managed services or the business of VARs and resellers and system integrators. And then you actually go beyond the industry. You look at car dealerships, you look at retail stores, you look at groceries. Last time you bought a car, last time you bought a TV, last time you bought a jar of peanut butter. 75% of the world goes indirectly. You actually have to think in your personal and professional life is the last time you actually bought direct from a manufacturer. Unless you bought a Dell, you might have bought Geico insurance. But most of your life actually has this transactions in it. So it's a really big part of the market, and it's one of the least understood parts of the market. I used to say that, if you go on Amazon, there's 450,000 books that you can buy on how to sell or market better directly. And if you want to go and sell and market better indirectly, there's just over 100 books. It's just a big gap in terms of how this works and how companies work with it. So, it's interesting when you say 70% want out, because I would say, this is the best of times. We're on about an 11-year run here after the Great Recession of a lot of trends that are driving optimism. So not only in the United States, but if you look at the G20, the GDP growth is roughly 3%. It's been very, very solid. I think we just yesterday hit the lowest unemployment number in 50 years, which is good for us. More clients, more seats, more things to sell. We have governments. We have one in the US, we have one in the UK, we have ones around the world that tend to be conservative, tax cuts, driving small business. 96% of MSPs are under 10 people, so they take advantage of tax cuts as well as taking advantage of customers who hopefully have more money. So, good news. Third, I worked for IBM for 17 years and sold hardware. And for 10 years now, hardware has been lagging, as we know. But now hardware is up ahead of GDP, so we're running on all cylinders. Hardware, software, and services are driving this industry. Again, good news. Doesn't seem like a lot of people would want to run away from this. The other thing is, and I sat as the chair of emerging technology at CompTIA, and I sat on a lot of these boards looking at AI and automation and Internet of Things and drones and self-driving cars and blockchain and quantum computing. And you give the list of 20 things that are coming. Well, in a lot of your businesses now, they're not coming anymore. Many of you are driving large revenue streams in these areas. So I picked off one example because underneath the 27 industries in the world, there are 297 sub-industries. If you want to know the fastest growing industry in the world, it's this one, RPA. Anybody do RPA here or dabbled in it? One and a half? So RPA has nothing to do with robots. It's software. And it's companies like UiPath, Blue Prism, Automation Anywhere, if you've heard of those names before. Well, this is a picture of the headquarters of UiPath. Last year, they grew 5,614% as a company. Small growth. What's interesting is they're the fastest growing enterprise software company in history to 100 million. It was Microsoft. Microsoft got replaced by Salesforce. Salesforce got replaced by Slack, and now UiPath is the fastest growing company ever. And I was just at their event last week in Vegas, 10,000 channel partners in the audience, making bots. What does that mean? It's workflows, it's software transformation. Every customer is going through their digital transformation. How do you connect the dots? Even within Connectwise with all the different pieces and parts, and as of a couple days ago, lots of more parts. But how do you connect those dots? It's these software automated bots. These are the companies behind it. This is the fastest growing channel. This is the fastest growing industry. And for many of the audience here, and if I asked 3,744 people, there's probably only 15 hands that would go up that are dabbling in this area. Huge growth, obviously high margin business. But it's an example of millions and millions of dollars of AI automation that's actually being delivered to customers today, as opposed to 5 years from now, it could be huge. The other thing is we watch companies very closely. So in the technology space, this is telecom and technology and print and pro AV and the larger technology space, there's about 10,000 companies that run channels. And I get to speak to a lot of them, ask them about their channel program and where they're putting their money. I asked them that, Microsoft, for example, is 96% indirect. Some companies are 30% indirect, and I get to ask them, where are you placing your bets? Where's the money going for 2020? Are you going to put more into direct sales? Are you going to hire more people? Are you going to spend more in direct marketing? Buy more Super Bowl ads? And the answer, actually, no. We're actually going to invest in the channel. This has been a blind spot for us, and this is why. About 20 years ago, actually almost exactly 20 years ago, Salesforce.com came into being. They were founded. And back then, on the sales side of things, and if you remember, for those of you that were around 20 years ago, if you remember, salespeople used to walk around going, I manage with my gut. You got to be born to be a salesperson. Well, that doesn't happen anymore. Everything's to the 7th decimal point. For 20 years now, we've evolved and matured the sales process. So when the VP of sales goes in front of the board or in front of the CFO and asks for money, here's what I'm going to spend it, here's how many calls they're going to make, here's how many top of funnel, blah, 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 and here's exactly the science behind this. Back then, there was 300 companies that built CRM software. Today, Salesforce wins 71% of all new deals. Between them and Microsoft and Sugar and a couple of others, there's only a handful of winners today in that space. 10 years later, the same thing happened in marketing. So for those of you around 11 years ago, you used to hear marketing executives walk around going, 50% of my advertising dollars are wasted. I just don't know which 50%. Big, really funny at cocktail parties. But marketing automation, there was 150 marketing automation companies 10 years ago. Today, there's 5 winners. Marketo, Pardot, Eloqua, HubSpot, Acton. 3 of those were bought by Oracle, Adobe, and Salesforce. So it's now a market that's pretty well known, and nobody's walking around joking anymore at cocktail parties. In fact, the VP of marketing or the CMO actually spends more money on technology today than the CIO. And they go in front of the board, they go in front of the CFO, and don't give it to the sales bozo, give it to me. Because I got the levers and dials to take that same money and drive higher return. So give the money to me.
That's very hard to believe.
What's that?
That's very hard to believe.
It's hard to believe?
CMO spends more money than CIO?
Just wait. We'll walk through the data. So we're in the 3rd stage today, talking channel enablement. So 75% of the world goes indirectly. We've spent 20 years building out direct sales and marketing capabilities. Oops, a little bit of a blind spot. We've got 50,000 managed service providers in the world. We've got 600,000 technology companies in the world. We've got all these people that are paving that last mile to the customer that we haven't been focusing on for 20 years. So guess what? A lot of money is shifting now into programs, which is good for us. So I'm trying to tell a really good news story here. Why would anyone want to run away from this type of business? It seems like all the trends are coming into our favor. And this is when we took a step back and started asking questions like you asked about marketing and what's going on. And these are the converging trends that we started to pick up on why people might be interested in leaving for any reason. One, probably the biggest impact we've seen in 37 years in the channel is the new buyer. I worked for IBM, and back in August 12th, 1981, we announced the first PC, built a very small channel. Compaq, a few years later, built a really big channel that everybody had to follow. And then Microsoft exploded it from there. Almost built it up to 1 million partners globally. But we've gone through, think back then, the PCs weren't connected. There was no security issues back then because they weren't connected. All these things that we've been through, dozens of technology changes. We've gone through business model changes. moving to recurring revenue. These are complex things that the channel didn't miss a beat. But what's happening is there's a new buyer, and it seems like the channel is missing some beats with this new buyer. We'll talk about marketing, we'll talk about a few others, but this is the new line of business executive who's the head of marketing, sales, operations, finance, HR, manufacturing, whatever the 10 lines of business are, that are now making 2/3 of every technology decision. So, to answer your question, there is an infrastructure charge on maintenance and the legacy type of stuff that keeps going. But if you look at every new project, if you look at every new investment that's being made today, 2/3 of them and 2/3 of the dollars are being made outside of IT. It is digital transformation at a line of business level with people who 10 years ago were called rogue IT or shadow IT. It's not anymore. This is the new normal. And this number is moving up to 80% over the next few years. So IT is not a technology purchaser anymore. In many cases, it's the federal government. It's security and it's compliance and governance. It's playing a different role. And we're playing a different role, because of that. What's interesting behind this number is in 29% of these cases, they block IT from being in the room. So I'm the head of marketing and I'm making a decision to roll out 7 pieces of software, SaaS, that's going to solve a problem. I don't have 2 years to wait for IT to run a project, do the due diligence, and do what IT does. I need it done by next Thursday. I'm going to do it myself. It's almost in 1/3 of the cases. So let's look at this new buyer. This new buyer, by the way, the B2B buyer, business buyer, looks a lot like a consumer. The last time you bought a car, 81% of you started with a Google search, went through and read some magazines, looked at videos, talked to friends, peer networks, social network. You went through a journey. And in a consumer side, it's about 68% of your time was digital before you ever engaged a dealership or a person. And what's happening in software today, there's 175,000 software companies. People are spending 68% of their time in that early digital journey before ever talking to somebody. What's scarier behind this number, because these are growing, 61% are actually making vendor selection before ever talking to somebody. So they go through this journey, you don't even get a shot at it. Because in 61% of cases, they've already made their decision. They've already built their cake, the 7 layers that solves their problem, before they talk to somebody. So if you're the head of sales and you're thinking of hiring a bunch of new people or head of marketing, you got to focus on that early part of the journey and who are the people that impact that customer earlier in the journey actually sit in this room in most cases. Second thing, a little bit scary to our businesses, looking at these new buyers, 73% of them want to buy direct. In a world that 75% goes indirect, now you've got the complete opposite, people wanting to buy direct. It's web direct, e-commerce, and marketplace, which I'll talk about in a minute. But this is different than we've ever had. And if you actually do a declining scale by age, it's like 83% of millennials, and Generation Z, who are just getting their first jobs out of college right now, is like 93%. It completely declines by age. And then we've got this other fascinating thing happening, which I'm going to talk in more detail about the channel, but the buyer themselves spend 51% of their time on tech. So the head of marketing now spends over half their time on technology and less than half of their time actually on marketing. Same for HR, same for operations, same for finance. All these executives now are technology people. They've been forced to by their own transformations. Every company in every industry is looking more like a technology company. Every service company in every industry is looking more like a technology services company. And now every buyer starts to look like a technology person. We're in an industry where everyone is flooding in. Very different. And then back to my car sales example. When they actually talk to somebody after the 68% and they've been on this digital journey and they're really, really smart, think about the last time you bought a car, you walk in, you know more about that car than the salesperson ever will. You know the engine, you've configured it, you actually went and got the invoice pricing, so you know within $100 what you're actually going to spend. They sit you down and you spend 8 hours as they go get you a deal from the manager. And you think to yourself for 8 hours going, I would pay you $100 more for you just to deliver the car to my driveway and hand me the keys. Because this thing is garbage. This is a 20-year-old sales cycle I don't need to go through today. I know exactly what I want. I know when I want it, where I want it. And if the laws change, you're going to be delivering the car to me and hand me the keys. But right now, the law protects dealerships and everything else in that industry. Talk to Tesla, for example. But the same thing's happening for software. The same thing's happening for services and other things. I've been on this journey. I know so much more about the solution to my problem than you do. And I don't feel like you've been on the journey with me. So I'm spending more time educating you and bringing people up to speed than actually, doing what I need to do not to get fired next week. So this goes to number 2, is the changing channel. And this is Larry here in the white van. And early on in my IBM career, I was like, my own KPI was how many logos on vans I could get, or logos on the front page of storefronts. I mean, how many times can I get the IBM 8-bar logo out there is how much I got paid, which was cool. But we're getting out of this zone now of millions of white vans driving around with logos. And this is what the numbers look like. The recession of 2008 was a damaging one for our industry. In fact, we are the only industry that has declined every single year since then. I talked about zero, the unemployment at the lowest in 50 years. The technology industry, especially the channel, hasn't actually grown its numbers since that recession. It shrinks every year. It used to be 1 million different companies doing this around the world. Now it's 600,000. If you go and CompTIA asks the remaining 600,000 owner principals, and 40% of them plan to retire in the next 5 years. So if you started your company in the 80s with IBM or Compaq, or in the early 90s, your average age is 58 years old. So we're getting through our first demographic turnover of our industry. And it's a big one. It's almost half. So if you ask about 70% of people wearing fancy hats and bright purple shirts, but are looking for an exit, not because there's something wrong with the business, because, hey, we're in Florida. We want palm trees, and we want a little bit of time to ourselves to enjoy the fruits of our labor. That answers 40 of the 70%. We still have to go into the other 30%, but that's a big number. The other piece of this is 75% of the channel will be millennials at that same time. And I was wrong, because 5 years ago I would have said that they're taking over mom and dad's business, they're starting up new MSPs like on fire, and they're not. And I'm starting to learn now, because I've spent more time outside of our industry figuring out where these new channel partners are. So next month I speak at Dreamforce in front of 180,000 people, mostly partners, that are highly millennial, probably 90% millennial, and don't know their partners. They don't resell Salesforce because Salesforce doesn't allow them. They shut down their resell program. There is no resell there. But they spend all their time in that ecosystem, and what Salesforce now calls a $1 trillion ecosystem driving in front of new buyers.
See, it's all about more and more business going through the channel. But at the same time, you just mentioned that Salesforce shut down the channel and going 100% direct.
Correct. So,
can you clarify?
yes. So through the channel, the actual quote of through the channel changes. The channel in Salesforce's eyes has now split into 3. Who is my channel that gets obsessed and influences customers in that first 68%? Are writing the ebooks, or doing the podcasts, or in that room with that customer, making vendor selection? That's part 1 of Salesforce's channel. There's a transactional channel that they're not as interested in, because only today, less than 30% of Salesforce is actually resold. It goes through the App Exchange and other ways. They're okay with that going to 0, because they're trying to push, and they're very specific about this, they're pushing the channel to the third part, which is the downstream. For every $1 that Salesforce sells, the channel can earn $4.14 of high-margin, sticky business based on every $1. Implement, integrate, secure, compliance, business continuity. I could whip you through all 17 tech services at 75% margins, and today, a 6-month waiting list to find a good Salesforce certified person. So why are you spending time on 20% resell when you could be spending your time over here at 75%?
So IT wars are in trouble because they sell licenses and hardware.
Who's in trouble?
The IT wars, the information technology.
This is not a great story for VARs, but there is a solution. So let me continue on here. So 96% of MSPs today are at 10 people. If you asked me 10 years ago, this is a recurring business that's highly predictable. You've already closed 80% of next month and probably 75% of next year's business. This is the perfect business to organically grow. We're going to have MSPs with 30 people, 40 people, 50 people, 100 people, 200 people, 300. This is like Accenture and companies that can grow so quickly because it's so predictable. Back when I sold laptops, I sold them one at a time, every deal I could win, hand-to-hand combat. We're in a business now that's so predictable. How could we possibly be at this long tail of channels still, which is interesting. And then, to the title of this presentation, looking for an exit. So what's interesting is if you look behind the scenes, I said this earlier if anybody was in an M&A panel that I was on, I said it earlier that you know the value of your house today because you can go to Zillow and it'll tell you. You know the value of your car because you can go to Auto Trader and look it up. But today, which is unlike maybe even 2 to 3 years ago, you can go find out the value of your business, almost to the decimal point, on a day-by-day basis. So the SLI, which some of you were able to do, but there are tools out there that you can actually look at the value of your company, look at where you are on the maturity scale and the templates and the frameworks. And there's so much more information about where you are today that people can make decisions. So if I want to exit my business and it's worth this valuation and I can get this check and this is how it works and the due diligence and everything else, I might be okay with that. Because I might actually want to step away from this opportunity and go run after this opportunity. Or for whatever life event that's happening, there's more information that we can go get about our businesses. The third thing is when we go ask customers. This was a really interesting thing because at Forrester we survey hundreds of thousands of these new buyers and we ask them all these questions. The one that I ended up starting to ask them is, I'm confused, tell me more about this 68%. Like once you've done the Google search and you start clicking on ebooks and listening to podcasts, tell me more about it. Because I thought that you have, an MSP or a VAR, you have like a system integrator. Like I thought I understood who influences you, but maybe I'm wrong. Tell me who led that podcast, who led the keynote you listened to, who's in the association you go to. Start to get more detailed. And it was interesting that these new buyers hire channels directly. They don't go to procurement and ask who's available and who's authorized. They don't go for an RFP. They say, here's the 5 people that are influencing me. Here's the couple that I'm going to work with through the entire project. We're going to get this thing done. I'm not going to get fired next week. 58% of the time. So they become the buyer for channels, for hiring you. And I wanted to take you through some math. I said it earlier, but there are 297 sub-industries. There's about 10 technology buyers today in each company. There's either 50 states or there's 206 countries. There's segments, SMB, mid-market, enterprise. And then 10 years ago, we had hardware, software, and services. Today, there's about 40 layers to the tech stack. Like there's 7 layers in security alone. So when you multiply all these things together, there's a magical number of 35 million conversations going on in the marketplace. And here's a real channel impact to that, is there's some big numbers floating around. I talked this morning about Accenture. Accenture has 450,000 people now. It's bigger than IBM in employees, biggest tech company in the world. And I think 400,000 of those people are vice presidents. Because here's how they do it. They go, there's 35 million opportunities. And if I look at this, mid-sized clinics in upstate New York with a marketing buyer looking to drive new patients in the door, those 5 vectors is a buyer. We're going to hire a vice president of mid-sized clinics in upstate New York and place them in Albany. They're going to be one of our 400,000 vice presidents. But to get that person, we're actually going to acquire a digital agency because that digital agency has been calling on these mid-sized clinics forever in upstate New York. That's who's going to be our vice president. And they're acquiring 10 companies a day, accountants, VARs, resellers, managed service providers. Everybody's getting acquired by these massive Accentures and Deloittes and PwCs and Capgeminis. And there's a global 15 SIs. They're building their companies around these permutations. I mentioned Salesforce bringing on 250,000 partners. Why? Because there's a lot of conversations they need to get into in front of the head of sales, head of marketing, head of customer success. They need an army early in that journey to make sure Salesforce wins that 61% of vendor selection early. It's not going to be Salesforce that wins it. It's going to be their army. They call them trailblazers. And the fishhook, how they're trying to reel them in is once you win it, there's $4.14 at 75% margins for you to go get. These projects just never end. It's not managed services. It's not a recurring. But through change orders, it just never ends. And those 180,000 people that are running into San Francisco and the 10 million people that dial in electronically are after that opportunity. They're that specific and that specialized. So we look at the shadow channels of what I called them. 10 years ago, these buyers used to be called shadow IT. So I called these channels shadow channels. Some people didn't like that, thought it was a little bit back alley type of stuff, but that's why I called it. So I mentioned Salesforce with 180,000 people going to Dreamforce, bringing on 250,000 new partners. But if I walk you through all the big players, AWS, Google, Azure, part of Microsoft, if I walk you through not only Salesforce, but NetSuite and ServiceNow and Workday, if I name the name of the top 20 or 30 SaaS companies, there are literally millions of people in their communities at events like this that are looking to go get that opportunity, driven by infrastructure, driven by SaaS, driven by cloud. High margin, very sticky, line of business experts, more than technology experts. You want your accountant running your security strategy? Well, that's what you get. This is the next thing. When I said every company in every industry becomes a tech company, I looked across all 27 industries. There are 150,000 accountants and CPA firms in the US. 81% of them are doing tech services. They're taking your websites, cut and pasting on their websites, and you have to go to like page 4 to find out that they also do tax and audit work. There are 108,000 digital agencies who 50 years ago were like Mad Men agencies. Then they did your website and some SEO work. Well, today they're doing tech services. They're doing those integrations because it's high margin. It's how they're staying in business. 78% of those 108,000 companies are now tech services companies. And I could go on, architects and legal companies, I could go through all 27, but everyone's coming in. The channel now is a little bit of a misnomer because everybody's doing it. So then we're getting some fantastic growth in other places that have become channels in themselves. One is ISVs. 10 years ago, there was 10,000 software companies on the planet. Anybody guess how many there are today? I think I said it earlier, 175,000. Do you know how many ISVs there's going to be in 10 years? There's going to be 1 million software companies, B2B software companies, not iPhone apps. These million companies, by the way, are building software today to solve for those 35 million conversations. That's the market they're going after, that level of specialization. What's interesting here now is they used to be looked at like technology alliances and APIs and things like that. Well, today it's different because 5,000 of them every year get VC venture capital funding. And they're building out armies of sales and marketing people to get into that first 68% in front of buyers. You build mid-sized clinic marketing software and you go get $1 million from venture capital, you're going to hire an army of sales and marketing people to get into every mid-sized clinic, into that first 5. They are now partners, they're competitors in terms of getting the mind share of these very, very specific opportunities. Born in the cloud was a huge swing. You have about 10,000 companies now that don't resell, 0% resell, but they do everything we do. They're the adult in the room here, security and compliance and continuity and all the core sets of technology. But they've now learned in these new line of business, the 65% of the world, that they can go play on double or triple margins than managed service providers can in that same room. They partner with accountants, they partner with digital agencies, they partner with all these different kinds of players because those players don't have those skills. And they just play part of that role. They don't own the contract, they're not a single throat to choke, they're not a general contractor, they're not the trusted advisor. They go in like an Uber driver does, they do their piece, they make money, they move out. Become very highly nimble, and again, haven't anchored their business on any resell. I talked about the fast-growing emerging tech space and startups. There's actually 800,000 companies today that build AI, automation, IoT, all those things I rhymed off. 800,000 companies that are all getting VC funding, hiring sales and marketing people, trying to become one of those first five people in front of your buyer. And then finally, I did mention the big system integrators. You would never find, when I worked at IBM, Accenture was only in the big banks, Fortune 500. They spent all their time. You couldn't even start a conversation with Accenture without writing them $1 million check. Well, now that they have 450,000 people, they've got into mid-market, they're getting into SMB. This is their complete play across 35 million conversations. They're going to be there at that specialized level, and you've got 15 of these players, some out of India, the big players that used to be audit accounting companies. They've all come into tech services. You can't have a digital transformation conversation today without them trying to get into the room. By the way, if you are a mid-sized clinic and you type in, I need to transform myself, Accenture, Deloitte, PwC, Capgemini, they're all going to come up in your first page of Google because they've written the ebook, they've done the podcast, they've done the webinar. They're probably hosting a little roadshow in Albany next week. This is the strategy of going down market at scale. So the next thing, you've got a place where every company's becoming a technology company. And you ask yourself, why? Well, first, in the consumer world, we know why. I haven't been to a grocery store in 9 months. It comes to me. Car washes come to me. Oil changes come to me. I've got an app for everything. My phone is full. But in the corporate world, I started to dream up some very old school industries. This manufacturer on their forklift has added Internet of Things. A forklift only does one thing, which is lift stuff. What if I put in a little sensor that manages how much it lifts, the temperature, where it moves to, and gives you 1,000 other data points per second? Give you that data as a customer so you can become a better construction, builder, architect, whatever you do. And what if I sit down with you and I charge you that way? I'm not going to charge you by the day or by the job or the way I used to. I'm going to charge you how much we lift together. We're going to help optimize, and we're going to reduce costs. We're going to help each other. You sit, from a technology perspective, having a different conversation. A train. So Hitachi said, we used to rent this by the mile, we used to rent this by the month, whatever way we used to rent a train. Well, now we're going to take a revenue share. Because we're going to sit with a customer, we have the exact same goal. Is to move more people, more efficiently, better logistics, better route design. We're going to take all this massive data around the world, every train we have moving in the world, and build in that best practice for you. So we're paid if you're paid. If this train is off the tracks for maintenance, we make zero. We're 100% aligned, but both a forklift company and a train company are now partners with Microsoft and Google and AWS. They're partnered with Salesforce and ERP systems and Oracle and SAP. They built out these huge technology alliances to be able to go have these conversations. It's just interesting to see that world. So the next really big trend that we're seeing is you can't call on, and I just had a conversation with Microsoft actually at lunch, you can't call on 50,000 MSPs at once. You can't call on 800,000 emerging tech companies or 175, there's just too many permutations in the world today. So things are lifting at what I call influencing the influencer. If you get obsessed over that 68% at the beginning, which you hear me repeat about 10 times, what does that mean to your customer in that first part of their journey when they make their decisions? But who influences them? And for me, it comes down to 3 very simple questions. What are they? Actually, if anybody's recruiting new partners, it comes with the exact same questions. What do they read? Where do they go? And who do they follow? Everybody is really, really busy. We all get 300 emails a day. We all have busy, busy lives. So we don't have time to read 54 channel magazines, which there are. We don't have time to go to 150 channel trade shows a year, which there are. We don't have time to join 24 associations, which there are. So we don't have time to do all that. So if you look backwards, you tend to narrow in who you trust and the places you get information and how you build out your own business and things like that. And this happens at scale. So this is what I drew for your world. Those are the 54 magazines on the left. You will get these charts, by the way. I'm sure the photographs don't come through that great. There are the 24 associations. You are part of the Connectwise IT Nation here, but obviously in this industry, you could be part of Datto, you could be part of Kaseya, you could be part of SolarWinds. But outside of this, you might be in other vendor communities as well. Lots of distributor communities on the bottom right. On the bottom, you've got thought leaders and peer groups and different kinds of things. And in the bottom left, you've got 150 trade shows you can go to every year if you really wanted to. I think I have seen some people at all 150. But this is the world. And if I want to influence the influencer, if I want to influence you, because I kind of said to Microsoft, you haven't really been here at IT Nation in a while. How do you expect to have a security conversation, a Teams conversation, UCAS conversation? How do you expect to have this if you're not in the thread here? And then the second piece, there's an interesting thing you can do behind this for each of your customers. If you click into every one of the, actually get somebody to do this for you, click into every one of these logos and find out the people that are driving those logos. So CRN is the biggest magazine in our industry. Who's on the front cover? Who are they writing about? Who's keynoting at their event? Who's on the board of directors? Who's on the board of advisors? Go write down 100 names at CRN. CompTIA is the biggest association in our industry. Go to CompTIA. Who's on the front cover? Who's on the communities? Who's on the board? Who's keynoting their event? When you see somebody twice, give them a check mark. Because it's CompTIA, it's big, give them 8 points for that check mark. If it's an ASCII roadshow in front of 100 people, give them 2 points. If it's, just guide yourself as you go through this. I did this, by the way, wrote down 5,000 names, and I scored every single time I saw somebody. And here it is, in order of the most influential people in our industry. For fun, and I published it. But Rob Ray, who's here, not here in this room, but here, you know why he's not here? Because he's out in the corner with Joe Panettiere right now, cooking up something. Highly, highly connected, and these are the people that are the most powerful connectors in our industry. And these are the people that run the platforms. These are the people that execute through other platforms, the podcasts, the webinars. For the 81% of MSP Google searches, here is your first 2 or 3 pages of results that are anchored in a very few amount of people. Malcolm Gladwell called this the law of a few. Every large industry boils down to a very few amount of people. So if you want to influence the influencer stuff, I want to get into mid-sized clinics in upstate New York. It's probably not 100 people, it's probably 20. But there's 20 people that I need to go influence to get into the thread of that market. So now we're getting out of channel program conversations. We're getting out of this partnership, one-to-one partnerships. We're starting to talk ecosystems. What does an ecosystem look like for a forklift? What does it look like for a train? What does it look like for a managed service provider? Where is the benefit? Where is the goal and the financial benefit of being part of these ecosystems? Well, what we're learning quickly is those people that have 5 people influencing them and they come to a vendor selection after 61%, like all those numbers, they end up buying 7 things. They might start with Salesforce, but then they'll add 6 other companies on top. So the competition may not be at the foundational purple layer, but I want to be the top layer. I want to be just that small last mile software for those mid-sized clinics in New York. Or it could be in the middle for security, or it could be at the bottom for continuity or compliance or HIPAA and high tech. I mean, there's a lot going on. But on average, every single one of those buyers are going to buy 7 things. Like there is no one security company today. There's 2,000. And none of them can sell you an end-to-end security stack. You actually have to layer things together to do the full layer of security, right, including physical security. Same thing happens with every single one of these decisions. So I talked about the scale of this globally, 250,000 new partners coming at Salesforce. Microsoft, who already has 400,000 partners, are bringing on 7,500 new partners a month right now. Talking about, you want to be ahead of onboarding for that? It's all digital. It's all automated. And the interesting thing is 80% of these new partners are non-transacting. They will never sell 365. They will never sell Dynamics. They don't sell Azure. Why? Because Microsoft knows that for every dollar of a certain level Azure, there's $7.68 downstream. Don't focus here, move over here. Here's how to build a big company. Here's how to build big opportunity and service them less like they've serviced for the last 30 years and build an ecosystem so everyone can come to the table. AWS, being the largest infrastructure layer cloud player with Microsoft knocking on their door, but they had 30,000 partners a couple years ago. Then they had 60. Now they have 120. When I go back next year, it'll be 240. AWS will probably have 1 million partners in 4 or 5 years. That's the size of everyone coming in. That train, that forklift, everybody needs an AWS relationship, but it's not going to be a gold, silver, bronze program with all this. No, it's going to be part of the ecosystem. They're going to help you marry up with other people, accountants and digital agents, everybody DevOps and doing other things, RPA players, to help you go sell more. So your world kind of turns into this. It's not the general contractor, single throat to choke, but who are all those 5 people in with your customer early? How many relationships do you have with those people? So when you go beyond your customer, they're out talking about you in 100 different places in your community. And who are all these partnerships you need to build internally to make that happen? And this is what we're starting to see in the marketplace. I talk about the multiplier at Salesforce being $4.14. It actually grows to $5.80 in 5 years. Earlier this week, they just published a big thing calling the Salesforce ecosystem, even though they're a $13 billion company, they call it a $1 trillion ecosystem. It's some fuzzy math, but the idea is if you take every employee, every hot dog you buy along the way, Salesforce creates $1 trillion of economic value. So you're going to start to see these ecosystems start playing that number. So you're not going to be reselling if those 73% of people get their way. You're going to be playing in the ecosystem at much higher margin, higher revenue, and a much higher valuation for your company.
They're saying $1 trillion a year.
Yes.
They're a $22 trillion company, so they're basically claiming.
They're a $13 billion company claiming $1 trillion economic value.
So they're basically claiming they're about 5% of the U.S. economy. Doesn't that sound like bullshit?
It does sound like bullshit. And by the way, the global technology space is $5 trillion, just shy of that. So they're claiming to be 1/5 of the global economy, technology economy, which is a hard thing to. I will say, yeah, it's rarefied air. No, but if you walk around and say, oh, did our Salesforce just ram through that server bank over there? We're going to count that. Oh, did it just bounce off these different clouds? Oh, we're going to count all that. I mean, you can get liberal with your spending. But the real math is the $4.14. That's the literal.
Where do you get those multiplier numbers? How do you know that this, whether it's Microsoft,
Yep.
Connectwise, or whatever, how do you find those numbers?
So if you're asking about Connectwise and Continuum, if you're asking private equity, and if you're asking like what all the math, how the math makes sense, it's the platform. Could Connectwise at some point take on a ServiceNow type of valuation? The answer is yes. Let ServiceNow take the Fortune 500, let Connectwise take everything else. Can a platform that now has all of these pieces, like documentation and all these pieces around it, continue to build like Salesforce built and create this downstream opportunity? So that one day somebody gets on stage and says, for every $1 of Connectwise that you spend with us, you're going to sell X. And that's the platform value. And right now, if you're on Wall Street, you're in private equity, that's what you're thinking, because that's where the money's going. That's why there's such a push to separating the channel into 3 groups. You're going to be the ones in with the customer at the beginning. You're going to be the one actually facilitating the transaction. You might actually carry them to the app exchange and get value for that. But more importantly, the post-sale, the downstream economic value. Because at IBM or Lenovo, where I worked, we could never say this number. It's total cost of ownership. Can you imagine telling a customer you're going to spend $100,000 on Salesforce? I hope you have $500,000 lying around because it's not going to work. We sell you a bag of sugar and a bag of flour. You need people to go bake the cake for you. Like, we couldn't say that. You can't say selling a laptop, it's going to cost you because it does. But we couldn't tell them that. They had to learn through you how much it costs to make all that client server work. But that's all they're doing here is they're publishing the number. And it's kind of a shot to the customer is like, oh, so I'm not buying a solution here. I'm buying something that other people have to create a solution. Okay, I get it. Now I want to anchor back on marketplaces because this is an important nuance. 73%, don't believe the big number. Believe this one. People say things like, oh, it's easy to buy on Amazon. I just do it, comes in 2 days, it's great. Oh, what if you could buy 7 layers of security that way? Oh my God, that'd be awesome. You'd find 73% of people that say that's great. But there's actually 17% that are doing it, are going to do it by 2023. In B2B, where we're looking at this, there is $13 trillion of spend, from forklifts to paper clips to technology. And 17% of that is a big swing. We're going to see trillions of dollars of movement in the next little while onto marketplaces. Amazon for Business already is cashing in. Alibaba, you've seen some consumer-level marketplaces, but now you're going to see corporate-level marketplaces. Connectwise has their marketplace, but it's not really a transactional marketplace today. It's more of an information-gathering place. But Salesforce shut down their resale program. They're going to sell all 26 billion on the App Exchange. And then all 7 things or 6 things you buy on top of Salesforce, they're going to sell you through the App Exchange as well. Interesting. They get to tax that at 15%. The interesting thing is they just added all the partners onto the App Exchange. Every consultant, every MSP, everybody that can help that last mile is now on the App Exchange as well. So the customer can go and find the solution, the hardware, the IoT, the people. They could build their whole project and bill it in one place. And guess what? Salesforce gets to tax you for that benefit. They'll charge you 15% for being on there and earning that business, which you might be happy to do because you don't have to market or sell. You can just go do that. But what the interest and why Salesforce, by the way, I'm just keep picking on them, but why they're valued today at $130 billion in Wall Street on the stock market is because of that. They watch companies like Apple, who, to get on News Plus, they tax you 40%. You're already a magazine or newspaper that's not making enough money, and they're charging you a 40% tax to get the benefit of Apple eyeballs, who happen to be, good spending eyeballs.
Connectwise is already going that way. They're going to
Connectwise.
taxing everybody in the vendor room 20% to plug into the application.
Yeah.
That's exactly what it is.
We are a cloud services provider negotiating a deal with Connectwise. They want in excess of 50% of my gross margin to be at the marketplace. 50%.
So someday, when 17% of all your customers are there, you might have to make a decision that it might be worthwhile. Most people now just raise their prices to cover that. But the fact of the matter is, when I ran a software company for 6 years before Forrester, I paid them, the fee. And I just took it as, like I'd pay somebody else, a marketing and sales fee. But it is what it is. What's that?
Is the marketplace sustainable when they want to charge you 50% gross margin just to be on the marketplace?
I haven't heard 50. I haven't heard 50.
It is 50.
But there's 15, but I would say no to that one. But the fact of the matter, it is sustainable, and this is the way things are going to work for the next 10 years. These companies at that foundational layer are building platforms, and they're going to tax the platforms. Did you see Apple results? iPhone sales down. They're selling more AirPods now than they are Macs in terms of revenue. Like, this is something that would drop the stock in half, except for the investors looked at the services number. They're taxing the heck out of the ecosystem. And they're watching that services number now will become number 2 to iPhone revenue. And they drove it up. It's $1 trillion valuation. Microsoft's $1 trillion valuation. It's all this new math. It's all ecosystem, and it's all at that level.
Yeah, but at this enterprise level, yes, you have people who can sit around and be paid to go out there and research all this stuff, right?
Yep.
The SMB level, where 96% of all businesses have less than 10 people,
Yep.
they've never even heard of Connectwise or AutoTask or HireBall or fill in the blank, right?
So what have they heard of? They've heard of whatever the 81% of them do the Google search on, the start of their journey.
Well, they're not searching on that. They're searching on, the local IT guy in Midland, Texas.
Are they? Careful. They're actually Googling what their problem is. I'm a head of marketing for a mid-sized clinic, and if I don't bring new patients in the door by next Thursday, I'm fired, is what they're Googling. The IT guy happens to show up because he's within 5 miles, and Google loves local business.
You realize the majority of our clients don't have IT people, right?
I do. But I'm talking about the marketing buyer doing a Google search. This is who is in that first part of their journey is the most critical thing.
You don't have dedicated marketing. That's what I'm saying. Is,
Right.
you're stratifying these, C-level executives and saying the majority of the sales are coming outside of the IT suite. What I'm basically saying is there aren't any stratifications like that within the SMB space. And I'm saying
I got it.
SMB, like, pick a number of
Yeah.
my speed.
If I had more time, we could have a 1 to 9 talk, a 10 to 24, a 25 to 49. Yes, it changes. If you're in the consumer world, it's a much more a Best Buy for Business, Office Depot, VAR discussion than it is somebody with 100 employees versus 1,000 employees. So with more time, I could have better stratified this. I'm just trying to give generally where the SMB market is thinking. On the distributor side, there is really 4 things going on. And this is important, and we talk about 70% that want to get out. The distributors for decades now have had a core line card that's either going flat or shrinking in some cases. It's the core business of Cisco and HP and Dell that drives about 80% of their revenue. Every one of those big public companies are reporting flat earnings in those parts of their business, and they're making a lot of acquisitions to counter that. Second, their core customer, partners. I said it's been declining for 11 years. This is who they're a bank to. There's a quarter of MSPs that lose money. There's a next quarter that struggles sometimes to break even. So the health of the market isn't what it used to be, and if you're the bank or creditor behind that, it can be challenging. The problem is, as things come out more to ecosystems and marketplaces, Connectwise now becomes a competitor to distributors in a lot of cases. Because the MSPs will look maybe at a Connectwise marketplace instead of an Ingram one, where they might have traditionally looked. And then they've got a math problem, which is permutations. They were good at, when I worked, all those years with couple hundred companies on their line card, selling tens of thousands of SKUs to 30,000 partners. Really, really difficult, and they got really good at logistics to be able to do that. But I've just talked about 1 million software companies and 35 million buyers and 1 million this and 1 million. I mean, we're now at a zone of way too many zeros, and we're talking AI and automation now taking over distribution. That's why you're starting to see players like Pax8 and SureWeb and other players starting to make more noise in that this isn't a pick, pack, and ship logistics conversation anymore. It is a permutations conversation from a distribution level. And then finally, I talked about Uber. I talked about this gig economy. If there literally is 5 people in the room who could all add value at some point to bring in more patients in a mid-sized clinic, how do they all work with each other? What's the value of that contract? How do you split it up among your expertise? And stop thinking through being the total general contractor of all of it and hiring sub-employees to go do that. But how do you start plugging in and start deploying in a very agile and a real-time way? I've got a skill on a bench, a skill can fit over there, they can go do the project, they can make it happen, pull in the money, move. And start moving through these 35 million opportunities, less about ownership and more about, the speed of execution and deployment. So wrap it all together, the e-myth was kind of built around, VARs and resellers and things like that. But looking at your own capabilities and capacity, talk about will, the demographic part of this. Talk about all these other people's influencing. There might be other opportunities within your current buyers. The first thing I always say as a takeaway is, next time you go to a client, flip through the guest book if they allow you to. There's an 80% chance that everybody that signed in before you is in there somewhere talking about technology. Do you know who these people are in your community? There's an ability to go figure out, where a lot of these technology dollars are being spent. The second is focusing marketing and sales on this new buyer. And again, this is a little bit higher up the stack in terms of SMB, people who do have employees. But getting obsessed on that early part of the journey, and that's for everybody. So digitally, people are walking through a different buying journey. And if you're not there early and digitally, there might be a chance that you're not called before they make vendor selection. And those numbers are going in the wrong direction right now. It's growing each year. Looking at communities and super connectors in a different way. If they don't allow you to look through the guest book, you can do some of your own reconnaissance work. Find out in your location what people are looking at and who's in there talking and what the different meetup groups are and the Chamber of Commerce and all the different things. You can digitally go in and build your own map of influence to maybe some of these smaller businesses. I've talked a lot about, hyper-specialization, and, many of us have a lot of things we do really well. If we got a shot, we could go win 80% of all mid-sized clinics or whatever we do really, really well. And what our vendors are looking for is for you to declare that. Google is looking for you to declare that. Facebook, all these marketplaces, they're all trying to build out an algorithm that can find that mid-sized clinic upstate New York person for that customer. If you're still marketing as all things to all people all the time, you'll never show up anywhere. So you've got to make, and it's not one declaration. There might be 5, 10, 50, 100 things you're really good at in that 35 million heat map. You've got to go and make those and make sure you've declared it to the world, especially digitally. Start thinking about codifying, because I asked the RPA question on purpose. There's a lot at the last mile that you can actually become a software company pretty easily. No DevOps, no programmers. Just start to move some of these workflows. And what appears to be software on a marketplace isn't. Like Accenture has 2,000 lightning bolts on Salesforce App Exchange. None of them are software. You click on install, it sends a lead to somebody. But what it is they've packaged up enough of their IP. So if you're that clinic, they'll walk in and say, oh yeah, we've seen this 100 times before. Here's the process, and here's how we connect the dots, and here's how we do. It's basically a lead for service. But in the future, if 17% go through Marketplace, you're going to have a 1-2 punch. You're going to show up as a technology, and you're going to show up as a service. It's a second chance and probably doubles your chances of winning a client. Look at these ecosystems. Look at the marketplaces. I mean, dabble in terms of what Connectwise is doing. Ask the hard questions if it is 50%, whatever it is. But look at the other marketplaces, where your customer may end up. If they do end up for Amazon for Business or AWS, if they end up in a Microsoft marketplace, it doesn't matter because there's a way to market within that marketplace that you earn that downstream multiplier. And if you give up the transaction, that might be okay to earn the bigger numbers downstream. But I think in the next 10 years, one of the biggest jobs that we don't know that exists yet is marketplace SEO. We know a bunch of Google SEO people that, keywords and retargeting and can get you on the first page of Google, but now we're going to have people that can help you get on the front page of a marketplace. I want to win the first page of Amazon. I want to win the first page of Microsoft and IBM and Intel and Oracle and Salesforce, and I rip through the 20 winners. I want to be on the front page for mid-sized clinics on all of them. And that'll be part of the digital journey that you end up winning. So thank you very much. I know I took a lot of questions throughout. We have about 1 minute left. Maybe one question?
How do you bring the premise of this
Yep.
breakout session was why 70% of MSPs went out? You're basically saying that this ecosystem is what's driving people possibly to the industry?
Expand maybe what they do in the industry or slightly reposition themselves in the industry. So 40% are retiring. The other 30% are looking at customers. They're looking at ecosystem, each of these 10 trends, and perhaps staking out a new claim on where they're going to exist. They'll create a software company on top.
But they're being redefined.
Correct. None of us are walking away from being technology entrepreneurs. But we all look to make money. We all want a nice big exit. We all want a yacht. So the idea is, where can I take my valuation? What are the tips and tricks? Where's the customer going? Because it's always the customer that leads us. How can they lead us to more profitable, more expansive businesses? And those are some of the trends that we're seeing. All right. Well, thank you very much. I can catch up afterwards.